Hey there, welcome to the Viral Pod, brought to you by Taught to Teach community, founded by Mukul, Ronak, Das, where we talk about news, views, and reviews. I'm Max, your go-to guy for facts, insights, and the occasional dad joke.
And I'm Mia, the one who's here to make sure you're not just informed, but entertained too. Because life's too short for boring podcasts.
Together, we dive into trending topics, dissect the headlines, and serve up honest reviews with just the right mix of wit and wisdom.
So, if you're looking for fresh perspectives and real talk, you're in the right place. So sit back, relax, and let us do the talking. This is the podcast you'll want to hit subscribe for.
Okay, so are you ready to jump into some really interesting stuff? Because today we are going deep on the deep dive, right?
Yeah.
Into a story that's been making a lot of noise, especially if you're following what's going on in India.
Yeah, you got it. We're talking Trump's 2025 tariffs. And yeah, I mean, you've probably seen the headlines, right? All this talk about trade wars and, the stock market going a bit haywire. And we're here to kind of cut through all the noise and really figure out, what's actually going on. And even more importantly, what it means for, you and me.
Exactly. And, before we get into the nitty gritty, I think it's helpful to just take a step back and make sure we're all on the same page, right?
Mm-hmm.
What are we even talking about when we say tariffs?
It can sound a little jargony.
Yeah, totally.
Yeah.
So imagine, your favorite cricket bat. Let's say it's made overseas somewhere. And when it gets shipped here to the U.S., the government's like, hold on a sec. And they slap on this extra fee just for it crossing the border.
Yeah, just for entering the country.
Exactly that extra fee. That's a tariff.
Yeah.
Basically, it's a tax on stuff that's coming in from other countries.
And, these aren't always small fees either. Recently, the U.S. under President Trump has, rolled out some pretty big new tariffs that are kind of shaking things up in the global economy. And yeah, India is definitely feeling the effects.
So our mission today is pretty straightforward, right? Yeah. We want to understand why these tariffs suddenly popped up and then really dig into how they're specifically impacting India and not just the overall economy, but what you might see when you're out shopping or even just in your everyday life.
And we've gone through a ton of research reports and analyses to try to bring you the key takeaways, without getting bogged down in all the technical stuff.
For sure. And I think what's really catching everyone's attention is the sheer scale of this, right?
Yeah.
President Trump put a minimum 10% tariff on almost everything coming into the United States. I mean, it's a huge amount of global trade. We're talking about goods from something like 180 countries now facing this extra cost.
It's massive. And it's interesting because India specifically is now looking at a 26% duty on all the goods it sends to the U.S.
26%. That's a pretty big jump.
It is. And the big question, of course, is why?
Yeah, why single out India like that?
Well, the U.S. administration pointed to a pretty substantial trade gap with India, something like $46 billion, basically. India's been selling way more to the U.S. than the U.S. has been selling to India, and the U.S. is saying, hey, this isn't really fair. There are all these barriers that make it tough for American products to compete in the Indian market.
So it's they're trying to level the playing field.
Exactly. They even gave some specific examples, let's say you have an Indian motorbike heading to the U.S. It might only face a super low tariff, a couple percent, but then flip it around. If an American car wants to go to India, boom, it could get hit with taxes as high as 70%.
70%. Wow.
I know, right? And they brought up similar situations with other products too, like rice and apples. The U.S. has low taxes on the Indian versions, but then India has these really high taxes on the American ones.
It does seem a bit one-sided when you put it like that.
Right. And so this 26% tariff for India, it's what they're calling a reciprocal duty. It's basically saying, look, you're charging us a bunch, so we're going to charge you a similar amount. Now, this announcement was even tied into what they called a Liberation Day address. And there's actually some sources saying the number was 27%.
Yeah.
So there's a little variation in the reporting. But the main message is pretty clear. The U.S. is basically saying, hey, India's been doing this to us for decades.
And their goal seems to be to try to shrink that trade deficit with India.
Yeah, they want to balance things out a bit.
Now, it's important to remember this isn't just about India, right?
Yeah.
That baseline 10% tariff affects a mind-boggling $3.1 trillion worth of stuff that the U.S. imports every year. We're talking about everything from your phone to the machines that make all the stuff we buy.
Absolutely. And then that extra 26%, maybe 27% for countries like India, that's really targeted. It's aimed at countries where the U.S. thinks there's this big trade surplus in their favor, which they see as a sign of unfair trade practices.
Gotcha. So the tariffs are in place. What happens next? Well, over in India, there was an almost immediate reaction across different parts of the economy. We saw stock markets dropping all over Asia, but India's market took a real hit, crashing by over 4% on Monday, April 7th, 2025. That's a lot of value just disappearing in a single day.
Yeah, it was a big drop, and it definitely made investors nervous.
I bet. And how's the Indian government reacting to all of this?
Well, it's interesting. They've actually stuck with their prediction for GDP growth. They're still aiming for 6.3 to 6.8% for this fiscal year, 2025-2026.
So they're still pretty optimistic.
They are, but there's a big if attached to that prediction. They're assuming that oil prices stay under $70 a barrel, which is a big deal because India imports a ton of its oil.
All right, so if oil prices spike, that could throw things off.
Exactly. Now, if we look at what private economists are saying, it's a slightly more cautious picture. Several experts, including those at Goldman Sachs, have actually lowered their growth forecasts for India by about 0.2 to 0.4%, predicting growth closer to 6.1% for the same period.
Okay, so a little less optimistic.
Yeah, and their main concern is the potential ripple effects of these global tariffs on trade. They think it could slow things down.
The one thing I was curious about is how much of a direct hit is this going to be on India's overall GDP?
Right. Well, one industry group in India actually suggested that the impact might be relatively small, maybe around 0.1% of India's total GDP.
Oh, so not a huge dent?
No, not huge. They think that India's competitive pricing and the government's support for exports might help soften the blow.
That makes sense. So how has India officially responded to these tariffs? Have they fired back with their own tariffs on U.S. goods?
No, not yet. It seems like they're taking a different approach so far. They haven't retaliated with tariffs. Instead, they're focusing on trying to find diplomatic solutions, and they're continuing those talks with the U.S. for a bigger trade agreement.
So playing it cool, trying to work things out through negotiation.
Exactly. It seems like they're trying to avoid escalating things further. And, to help out Indian businesses that export, the Commerce Ministry has put forward some proposals to the Finance Ministry, things like extending programs that help with interest rates on loans for exporters, helping companies find new markets to sell their stuff, and making it easier for them to get credit from banks.
Oh, so providing some extra support to help them through this.
Yeah, and it's worth noting that there were already some schemes in the budget to help with duty remissions, so that could provide some relief too.
Okay, so we've talked about the big picture now. Let's zoom in a little bit. Which sectors of the Indian economy are going to feel this the most?
Well, one of the sectors that stands out is gems and jewelry. They make up almost 13% of everything India sends to the U.S., and that new 26% duty is going to hit them hard.
Ouch, that's a big chunk of their business.
It is. And think about Surat, which is a major hub for processing diamonds. They could see some serious losses. And there's also concern about potential job cuts, not just in the diamond industry, but also in areas like auto parts and seafood processing.
How many jobs are we talking about here?
Well, across those sectors, some estimates say it could be as many as 500,000 jobs at risk.
Wow, that's a lot of people.
It is. And to make matters worse, the price of gold has also been going up, which adds even more pressure.
Right. So not a great time for the traditional jewelry industry, but is there any potential upside here?
Well, there's an interesting twist. Lab-grown diamonds are reportedly not subject to these U.S. tariffs, so that could be a growth area for India.
Oh, so while the traditional diamond business might struggle, the lab-grown diamond sector could benefit.
Exactly. It's like one door closing and another one opening.
Okay, what about other sectors like textiles or electronics? Are they going to be affected?
Definitely textiles, engineering goods, electronics, seafood, all of those are likely to feel some immediate financial strain, but there's actually a potential upside for the textile industry in a place called Tirupur.
Tirupur, what's special about them?
Well, the U.S. has also slapped tariffs on some of India's competitors in the textile industry like Bangladesh and Vietnam. So the thinking is that Indian textile manufacturers in Tirupur might actually be able to gain some market share because their products will become relatively more affordable.
Ah, so it's like a global game of winners and losers.
You could say that.
Now, I know India is a big supplier of generic drugs to the U.S. What's going to happen to that industry?
That's a good question.
Yeah.
India supplies a whopping 40% of the generic drugs used in the U.S., and there's actually some good news here. The U.S. administration has reportedly decided to exempt pharmaceutical products from these reciprocal tariffs.
Oh, wow. So that's a big relief for the Indian pharmaceutical industry. Oh, wow. So that's a big relief for the Indian pharmaceutical industry.
Yeah. It is, but there's still this proposed 10% tariff on digital services, which could impact India's huge IT sector.
Right. So while your actual medicine might not get more expensive, The tech services behind a lot of things could face new costs.
Exactly.
Speaking of industries that might be impacted, what about the auto industry? How are they reacting?
Well, Indian car companies like Tata Motors, which, owns Jaguar, Land Rover, and another company called Sona Comstar, they both saw their stock prices drop after these tariffs were announced.
Why is that?
Well, there's already an existing U.S. tariff on vehicles. It's around 2.5%. But there's been talk of potentially slapping on another 25% tariff on imported cars and car parts.
Whoa, a 25% increase on top of what's already there.
Yeah, and if that happens, it would definitely make Indian-made vehicles and components more expensive in the U.S., which could hurt their sales.
And of course, India is known for its IT services. How big of a deal is this potential tariff on digital services going to be for them?
Oh, it could be pretty significant if those tariffs go ahead. Major Indian IT companies like TCS and Infosys, they could be looking at a lot of extra costs, maybe as much as $1 billion a year added to their expenses.
$1 billion.
Yes.
Wow.
It's a lot, and one way they might try to deal with this is by hiring more people within the U.S. itself, but of course that would mean higher salaries compared to their operations in India.
So they might have to shift their hiring strategies and potentially face higher costs either way.
Yeah, it's a tough situation.
What about agricultural products, things like rice and seafood? Are those going to be affected too?
Yes, definitely. Basmati, rice, shrimp, buffalo meat. All of those are big exports from India to the U.S., and now they're facing a much less certain future.
In what way?
Well, American buyers are going to have to factor in these new tariffs when they're deciding where to buy their rice, their shrimp, their meat, and that could make Indian goods less competitive compared to other suppliers.
It's a ripple effect.
Exactly. And steel and other agricultural products are also likely to feel the effects of these broader changes in global trade.
Okay, so we've seen how different sectors are reacting. What about the overall stock market and the value of the Indian rupee? How have they been affected?
Well, remember that big stock market crash we talked about earlier? Over 4% in a single day. Some sources even said it was closer to 5% at one point. That really showed how spooked investors were.
Yeah, that was a big drop.
It was. And people were selling off stocks, especially in companies that rely heavily on exports, companies like Titan, Tata Motors, Infosys. It was actually the biggest single-day drop in 10 months, so it was a big wake-up call.
And what happened to the Indian currency?
The rupee weakened. It fell to 84.5 against the U.S. dollar, which was a 3-month low.
Yeah.
And this was mainly driven by fears that with exports slowing down, there would be less U.S. dollars flowing into India.
Less demand for the rupee.
Exactly.
So stocks are down, the currency's weaker. What about foreign investment? Was that affected too?
Yeah, there was a pretty significant outflow of foreign institutional investment, about $2 billion pulled out in April 2025.
$2 billion. That's a lot of money leaving the market.
It is, and it's the biggest withdrawal of foreign investment since 2020. So it shows that international investors are also feeling less confident about the Indian market with all this uncertainty around tariffs.
So it paints a pretty gloomy picture, at least in the short term.
Yeah, there's definitely a lot of concern, but, there are some analysts who think there might be a silver lining to all of this.
Really, a silver lining. What is it?
Well, for one thing, the U.S. has imposed even higher tariffs on some of India's main competitors like China, Vietnam, Indonesia. So in the long run, this could actually make Indian exporters more competitive in certain areas.
Because everyone else is facing even higher hurdles.
Exactly. And another potential advantage is that India started those trade negotiations with the U.S. early on, which could give them a head start in working out a favorable deal.
So while everyone else is scrambling, India's already at the table.
Exactly. And then there's India's decision not to retaliate right away with their own tariffs. Some people think that's a strategic move. Well, by not escalating the trade tensions immediately, India might be positioning itself as a more reliable and stable partner, and it could give them more leverage in those ongoing trade talks with the U.S.
Interesting. So it's like taking the high road.
Yeah. And I think we're going to see a lot of Indian businesses adapting and innovating in response to this whole situation. There will probably be new business models emerging, new government policies, and Indian exporters will likely focus on finding new markets for their goods and on making their products even better to stay competitive.
So diversification and innovation.
Exactly. And one industry group, the Federation of Indian Export Organizations, they actually predict that there could be over $50 billion in new market opportunities for Indian sellers, specifically because of these U.S. tariffs on other countries.
50 billion, that's a huge number.
It is, and they think that Indian companies can step in and fill the gaps where those other countries become less competitive because of the higher costs.
So there could be some big winners in all of this.
Definitely. We've already talked about the potential for the textile industry to gain market share, and there's also a lot of optimism about India's electronics manufacturing sector, especially with the government support through programs like the PLI scheme. And as global companies look for alternatives to manufacturing in China, even semiconductor manufacturing is being talked about as a potential growth area for India.
So potentially making more electronics and even getting into chip making, that's pretty ambitious.
It is, and it shows how India is thinking long term.
And what's the government's main strategy going forward?
Their top priority seems to be negotiating that bilateral trade agreement with the U.S., something that's mutually beneficial and covers a wide range of issues to create a more stable trade relationship. They're also working on free trade agreements with other countries like Bahrain and Qatar to diversify their trade partners and reduce their reliance on any one market.
Okay, so it's a multi-pronged approach. Negotiate with the U.S., find new friends elsewhere, and boost domestic manufacturing.
Exactly. It's all about creating options and staying flexible.
So as we wrap up here, I think it's really important for our listeners to remember that these tariffs might seem like abstract numbers and policies, but they have real-world consequences. They can affect the prices we pay for things, the jobs that are available, and the overall health of the economy.
Absolutely. And for India right now, it's definitely a mixed bag. Yeah. There are some short-term challenges that some industries will have to deal with, but there are also some potential long-term opportunities that could emerge from this shifting global trade landscape.
It's a complex situation for sure.
It is, but what I think is really interesting to watch is how India is responding. They're showing resilience, and they're taking proactive steps, both in terms of diplomacy and in supporting their own industries. They're not just sitting back and letting things happen to them.
Yeah, they're definitely playing an active role in shaping their own future. So for our listeners out there, it's definitely worth keeping an eye on how these U.S.-India trade talks progress. And on India's efforts to build stronger trade relationships with other countries, those developments are going to have a significant impact in the months and years to come.
And that brings me to a final thought for everyone listening. How might these big changes in global trade create unexpected opportunities or even challenges in your own field or in your everyday life? It's worth thinking beyond just the headlines and considering the wider ripple effects of these policies.
That's a great point, something to really ponder. So thanks for joining us for this deep dive into Trump's 2025 tariffs and their impact on India. Just to quickly recap, we looked at why these tariffs were put in place to address those trade imbalances, how they're affecting different parts of India's economy and causing some volatility in the stock markets, and importantly, how India is exploring new opportunities and forging those strategic trade partnerships to navigate this evolving global landscape. We'd love to hear your thoughts and any questions you might have on this complex topic. And be sure to tune in for future deep dives into other fascinating stories shaping our world. Until next time, this is The Viral Pod signing off.
See you next time.